over and under allocated costs. When we talk about allocated costs, we are usually talking about them with respect to a cost object. In the past, we viewed it this way, where we have direct costs, which are traced to the cost object, and indirect costs, which are allocated to the cost object. So we are typically talking about indirect costs with respect to the manufacturing process. It's been a while since we've defined indirect costs, so let's quickly do that again. An indirect cost is a cost that cannot be easily traced to the cost object. A few examples: labor, equipment, and supplies related to quality control. Another example: plant or building lease and/or depreciation costs. Those are just a few. There are many more examples. Now, typically, when we are talking about indirect costs, we are referring to manufacturing overhead, which refers to indirect costs related to manufacturing. Commonly, this is abbreviated as MOH. Now, in our most recent lessons, we've been looking at costing systems with respect to direct costs and our manufacturing overhead. We've been looking at actual costing, which is actual rates times the actual input for direct costs, and actual rates times the actual amount of input for the indirect costs. We've also looked at normal costing, which are the actual rates times the actual input for direct costs. And for indirect costs, they are the budgeted rates times the actual input. This means these two numbers do not equal. And that is because under normal costing, we utilize budgeted rates instead of actual rates. It's an estimate, so of course, it does not end up equaling the actual amounts. Let's use some dollar amounts for an example. We'll say actual costing, manufacturing overhead comes to $1.2 million, and under normal costing, the business has allocated $1 million. Now, these two amounts clearly do not equal, and we could say they are under-allocated by $200,000 because the normal costing amount of $1 million is $200,000 less or under the $1.2 million of actual costing. Now, if you are more accounting-oriented, you might prefer this to be presented in a different way. Let's use some T accounts. On the left, we can create a T account and call that MOH control, which is a fancy word for the actual manufacturing overhead incurred. Things like rent, depreciation, property taxes, insurance, etc., are all totaled, and it equals $1.2 million. On the right, we can have another T account, and we'll call this the MOH allocated. This is the amount of manufacturing overhead that is allocated to all of this business's jobs based on the cost allocation base. Now, at the end of a period, both of these accounts should be closed to zero. That will be done via an adjusting journal entry. And you might be saying, what? Well, why? Why do the MOH accounts have to be closed at all? To answer this, it might be best to go back and think about the entire flow of inventory. Let's do that. We start with direct materials. The direct materials used and the direct labor used, the manufacturing overhead. These amounts end up being put into production. They go into an account called work in process, or WIP. Now, the work in process that is completed during the period is known as the costs of goods manufactured, or the COGM, and those amounts get transferred into finished goods, or FG. And the finished goods that are sold, those are called the cost of goods sold, or COGS. Now, I'll ask you to turn your attention back to the left of the screen, the MOH, or manufacturing overhead. The amount of MOH allocated ends up in multiple accounts. Here's what we mean by that. If we highlight the MOH allocated, all of it goes to WIP. A big chunk of that ends up inside of finished goods, and then a chunk of that ends up in the cost of goods sold. This means if MOH is over allocated, WIP, finished goods, and cost of goods sold might be too high. And if MOH is under allocated, they might be too low. Let's go back to our example. In this example, MOH is under allocated by 200,000, which means they have allocated 200,000 less than the actual costs incurred. Like we mentioned before, we will need an adjusting journal entry to deal with this. There are multiple approaches, and we will cover two of them. One is the cost of goods sold approach, and the second is the proration approach. We'll start with the cost of goods sold approach. This is the easiest and simplest one to do. We take the difference, in this case 200,000, and we put it to cost of goods sold. Because we are under allocated, we will debit the cost of goods sold for 200,000. Then we close MOH allocated by debiting the account for 1 million. And then we can close MOH control by crediting MOH control $1.2 million. If you look at MOH allocated, which had 1 million in total credits, this adjusting journal entry closes it out. If you look to the left of the screen where MOH control had 1.2 million as a debit balance, this journal entry closes that out as well. This is the simplest approach, but it's not exactly the most accurate. So the cost of goods sold approach is best for smaller amounts. That's smaller amounts of under and over allocations, and also when we have smaller amounts in work in process and finished goods inventory. Now let's take a look at the proration approach. And to do that, we're going to flip over to a spreadsheet. Here we are in a spreadsheet that I set up. On the top left, we'll put in space for the accounts. These are the accounts that will be impacted by under or over allocations of overhead. First, we'll have WIP, or work in process. Next, we'll have FG, or finished goods. And then we have COGS, or the cost of goods sold. And we'll create a space to total everything. Now we need some additional information. Here's the account balance for each of these accounts before any adjusting journal entry. For work in process, we'll say there was $80,000 ending. Finished goods will have $115,000 ending. And the ending balance of COGS will be $1,605,000. We'll total that up. And that equals 1.8 million. Remember, this is before the adjusting journal entry, and before the adjusting journal entry, we are under allocated by 200,000. So once we add 200,000 to this, the final overall balance of these three accounts should equal 2 million. Let's see if we can get there. Let's consider the manufacturing overhead, or MOH, allocated. This is more additional information. You need to be told how much of the manufacturing overhead was allocated, how much of that is in each account before any adjusting journal entry. So I will give you this information. Inside of work in process, the 80,000 ending balance, we'll say $70,000 of that is manufacturing overhead that was allocated to the account. Inside of finished goods, the ending balance is 115,000, and we will say of that 115,000, 105,000 of it came from manufacturing overhead that was allocated. Finally, we have the cost of goods sold at 1,605,000, and we'll say the manufacturing overhead that is allocated and still sitting in that account is $825,000. This all totals $1 million. And we know that the manufacturing overhead allocated is 1 million, from the earlier example that we saw. Now we need the MOH allocated in each account as a percentage of the subtotal. 70,000 as a percentage of 1 million is 7%. 105,000 as a percentage of 1 million is 10.5%. And 825,000 as a percentage of 1 million is 82.5%. If we total this up, it should equal 100%. And now we can go ahead and actually do the proration of the, in this case, under allocated $200,000. And we'll do that as follows. We'll take the 200,000 and we'll multiply that by 7%. Once again, we'll take 200,000 and we'll multiply that by 10.5%. And we'll take 200,000 and multiply that by 82.5%. The total is 200,000. And so now what we can take a look at is the account balance after the adjusting journal entry. And that will be the 14,000 that we just put there, plus the ending balance before adjusting journal entry of 80,000. It equals 94. We could take the 21,000 and add that to 115,000. That gives us 136. And then we could take 165,000 and we could add that to $1,605,000. If we total this up, we get 2 million. As a reminder, it is these amounts, 14,000, 21,000, and 165,000, that we will use to help form our journal entry. Maybe I can even do it down here. We could say debit the work in process, and that will be 14,000. We can debit finished goods for 21,000. And we can debit the cost of goods sold for 165,000. Also, we can debit the manufacturing overhead allocated account, which was $1 million. And then finally, we can credit from the earlier example, the MOH control. Remember, control is just a fancy word for the actual in this case. We could do that for 1.2 million. And let's just see if it works out. And sure enough, it does. And now we'll leave Excel and go back to the presentation. We've been discussing over and under allocations with respect to MOH manufacturing overhead. We've talked about a few different things. Normal costing results in a difference between the actual MOH incurred and the MOH allocated. An over allocation means more MOH was allocated than actually incurred. An under allocation means less MOH was allocated than actually incurred. Both over and under allocations require an adjusting journal entry to close the MOH accounts correctly. There are multiple approaches, including the cost of goods sold approach and the proration approach. Let's look at each of those approaches and summarize them. Cost of goods sold approach on the left. If manufacturing overhead is under allocated, the adjusting journal entry takes the following form. We debit the cost of goods sold to increase it, because remember, we were under allocated. Then we debit MOH allocated to close the account to zero, and we credit MOH control or actual to close that account to zero. The proration approach is on the right, and if manufacturing overhead is underallocated, the adjusting journal entry takes the following form. We debit the cost of goods sold to increase it because we were underallocated. We would also debit the other impacted accounts. We would debit work in process to increase that, and we would debit finished goods inventory to increase that. Then we would debit MOH allocated to close it to zero, and we would credit MOH control or actual to close that to zero. Now, if MOH is over-allocated, the cost of goods sold approach would look like this. We would debit MOH allocated to close it to zero. We would credit the cost of goods sold to reduce the cost of goods sold because remember, we are over-allocated, so we need to reduce something. And then we would credit MOH control to close that to zero. If we are over-allocated and using the proration approach, again, we will debit MOH allocated to close that number to zero. We would then credit the cost of goods sold to reduce it because we were over-allocated, and we would credit the other impacted accounts as well. We would reduce with a credit work in process, and we will reduce with a credit the finished goods inventory. We will then credit MOH control or actual to bring that to zero. I hope you found this video helpful. Until next time, I'll say thank you for watching, and may your journey be joyful.
In the factory where numbers flow, we set our rates before we know. Estimate costs for overhead with an adjusting entry at the end. Over or under, we got to adjust. Bring the balance back to trust. Align the books, make them right. Shine the truth into the light. When applied costs are too high, over-allocated we can deny. Subtract the surplus from COGS we must, to reflect the profits that are just. Over or under, we've got to adjust. Bring the balance back to trust. Align the books, make them right. Shine the truth into the light. When applied costs are too high, over-allocated we can't deny. Subtract the surplus from COGS we must, to reflect the profits that are just. Over or under, we've got to adjust. Bring the balance back to trust. Align the books, make them right. Shine the truth into the light. If overhead is under-applied, expenses more than what we tried. Add the difference to COGS again. Reveal the costs where they have been. Over or under, we've got to adjust. Bring the balance back to trust. Align the books, make them right. Shine the truth into the light. Some spread the variance far and wide, to what we want goods that buy. Allocate based on what's fair, so each product takes its share. Over or under, we got to adjust. Bring the balance back to trust. Align the books, make them right. Shine the truth into the light. With adjustments made, the ledger's clear, reflecting true cost year by year. Normal costing keeps us straight till new estimates we create.